All right, let's do this. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Good. Hope you had a good weekend. It is raining here. We're talking about it. This is our first, Closing Beat when it's raining. I don't know how long you go back, but if you remember our last location, if it so much as drizzled outside, it sounded like elephants walking on the roof there. So hopefully it's not much of a problem. Doesn't sound like a big deal here to me, so we're going to just keep moving on with it. Monday market, that's what we're talking about here. We are financial advisors at Jazz Wealth because the shirt says so. Hope you check us out at jazzwealth.com. We also do all kinds of different videos. Our Wine and Wealth class last week was with Eric. Eric did beneficiaries and estate planning sort of topics there. And so got a lot of positive feedback on that. Happy with that. Also, our Notes from Jazz this weekend, which goes out to clients and research members, was probably the coolest chart that I've ever made to show the average and median stock market performance before, leading up to, at, and during a recession, so you could see how it tends to behave. It's pretty much the same every time. It's kind of cool. So all good there. Hope you'll check that out. If you're one of our clients, that should be in your email there. Otherwise, you can go to the dojo and check it out there. Our Fin Tips this week and going through the rest of the month of August is going to be for those of you that are in or near retirement, because we are going to spend September with our retired clients or those that are very close, going over all the geeky details there. So Wine and Wealth and a couple other classes going to be extra special there if you're thinking about joining us there. All right. This week, we've got CPI numbers coming out, which will be CPI and then core CPI, and I've already done a write-up on that. Notes from Jazz last week was to explain why CPI and core CPI, they're actually going to show that inflation has peaked, right? So the CPI numbers are inflation numbers, and they're going to show that inflation has peaked. I'm not saying that it's going to fall like a rock and we're back to 2%. I'm just saying it's going to show that it's peaked based on the data that goes into those numbers. We're actually able to identify that and share that with you guys as well. The jobs report last week was double expectations. Very nice, right? We added a ton of jobs there, and so good for the economy, bad for interest rates. Remember, if we're adding more jobs as the Fed's raising rates, they go, this isn't hurting anything, but we still have high inflation. Push it on, man. Let's go more aggressive there. So it's bad if you're looking for lower rates or you want the Fed to stop raising rates there. The sharp and quick rise in rates, the half point, the three-quarter basis point hike, basically they get to do a sort of a, what do they call it, a victory lap and say, we're not hurting anything. We can keep going there. Average hourly earnings were up 0.5% as well, meaning employees are willing to pay more. They still see the demand, and they're looking for those employees there. They wouldn't do that if their margins were tightening, right? So that's been the topic we've been talking about here, earnings and such that have come out. Tightening margins are what we want to look for. We're just not seeing that too much there overall. People are willing to pay more. People are willing to work for more, and for now, that's kind of a good sign, right? If you're thinking you're a doom and gloom recession type person there. As far as earnings go, I need to bring that to your attention. We've officially peaked in earnings season, so over 800 companies have reported already, and average earnings, I wrote it down somewhere. Average earnings beat rate 72%, revenue beat rates 70%. That's well above average, by the way. You could look at the 5-year average. You could look at the 10-year average. That's well above average. And the average stock price reaction to a miss on earnings, we talk about that. The average stock price reaction was only minus 1.8%. That's also well above average as well. So all in all, a really good earnings season coming up. And here comes the really thick part of the rain. So we're putting this office, our new office here, to a test. Let's go on to the good stuff. All right, here's a chart. We're looking at the S&P to get things started here today. Actually, I'm going to go over here. We use the SPY so you can see throughout. You can see we burned out just a little bit around 420. Yeah. That's it. You got somebody caught it there. That is your major resistance area. So we've already talked about that. You know what to expect in this area. It is a known area of resistance or extra selling pressure, however you want to say it there. We now, interestingly, find ourselves about 5% over the blue line. That's the 50-day moving average. Now, anytime somebody points out something, some data point, you go, yeah, well, thank you for that. But is that odd? Is it unique? Is it somewhat, doesn't matter, or who cares? Well, actually, it is kind of unique here. It's not totally unique that we make it 5% above the 50-day, but it is unique in what tends to happen afterwards. Here is a quick chart I'll show with you. What I did is I just made a real simple chart where we took the spread between the price of the S&P and the 50-day moving average. In other words, the higher this line is, the further away from the 50-day moving average we are. The lower, you could use COVID as an example, the lower we are from zero, the further away from the 50-day we are. We're currently about 5% away. I did not change this to percentage terms, I'm sorry. But if you look on the chart, how often in the very short term, this is short-term talking here, we're retirement investors, we like to focus on that, but in the short term, how often does the S&P get more extended than 5% away from the 50-day? Just look back. I'm trying to do this line as straight as possible. How often? Oh, there's one. How often? Oh, there's one. What happened after that? Straight down. Right? How often? Right, the rally from COVID. Everything leading up to that? Never. It doesn't do it. So right now, you have to tell yourself where we're at in the stock market in the very, very, very short term is probably not the most ideal time to buy. You're buying at a short-term inflated pricing area there, and so maybe not the best. To give you the actual stats there, if you look, anytime that happens, where price is above the 50-day moving average by more than 5%, you look a week out, the stock market underperforms itself. Still has an average gain of 0.22%, but if you look at the average gain over a 1-month time period, it's 0.66%. So the stock market just underperforms itself a little bit there. If you look over the next month, the average gain still positive, 1.53%. We'll take it, but it's a slower rate of growth than the market in any 3-month period. 1.98% is the average gain over the course of a 3-month time period. Well, whenever that happens, it's only 1.53. So you're getting underperformance. So notice that I'm not saying the market is going to pull back. I don't know, right? But I do know that historically it underperforms what it normally does. And so in that case, would you want to buy knowing you're walking into underperformance? Maybe not. You would hope for a pullback. And if you got that pullback, great. Then maybe you consider buying or something. So careful there. I just like to point out those fun things. Let's go back to the market here. So we look at the S&P. Basically, at the end of the day, it kind of came back to a whole lot of nothing. It was positive, quite strong actually for a part of the day there, but no bueno to finish the day. The NASDAQ actually recovered a decent amount there, but was still down on the day. Here's the deal. Let's go. There you go. So you got Apple pulling back after a very nice and healthy move higher. I can't type today. Amazon, there you go, pulling back after a very, very nice move higher. Nobody's complaining about what just happened to Microsoft, Amazon. Microsoft pulling back as well. These are the largest holdings in the NASDAQ 100, so we understand that. And then today you just had the extra kicker of NVIDIA. So NVIDIA is about 3.5% of the NASDAQ 100, and so it just got a beat down today. We'll talk about that in a little bit. What didn't get a beat down today was the Russell 2000 playing a little bit of catch up. That was your big boy index today. Did the most amount of growing, so we're happy to see that because it needed to catch up a little bit. It's now in first place with a 10%, about a 10% gain over the last 1 month, and it was a broad rally too. So you had small cap value, small cap growth, small cap index, right? All across the board, all gained more than 1% on the day. So the action was over there. Looking at some of the commodities and such for the day, you got crude oil. Oh, I'll tell you what, do this. Have you guys looked at, so we've got this, there we go. We got the Inflation Reduction Act, which is funny because it's IRA, but it is neither one of those. So the Inflation Reduction Act naturally is helping clean or green energy. ICLN is one of the ticker symbols you could use to look at that. This is in the renewable space. It's at 7-month highs there thanks to the Inflation Reduction Act, which I can't find anything that actually reduces inflation right now. there's a lot of great things actually that, over time, yeah, maybe it'll help, but I don't see anything just yet. But nonetheless, those stocks are moving higher there. And so good with that. The Inflation Reduction Act, if you were curious, is going to be really helpful for obviously the auto industry, electric vehicles and used electric vehicles. It's going to be helpful for transports. You would call them primary power generators. So if you're trying to research the NCIS code or NICS code, it would be primary power generators, going to be good for them as well. And others as well, this whole decarb movement that we're going through there. So I thought I'd point that out. And then it's getting down pretty good out there, huh? First Solar, I do want to point that one out as well. Got another pop today thanks to Goldman Sachs. So Goldman Sachs says, hey, look, we looked at the Inflation Reduction Act and we don't see any inflation reduction in there. But tell you what, First Solar is going to be a big beneficiary of this should it make its way through. And so that's the reason for that one here today. Well, I should point out that oil, it's not out of favor now. You got a little bit of a boost here today. It's trying to find a bottom there. You know not to buy it here in the short term. But oil, not falling out of favor, though, because corporate profits. So everybody that's like, oh, you can't have oil. That's crazy. I don't like that over there. Well, you may not want to miss the corporate profits here. So let's take a look for you real quick. I want to share one quick thing with you. Look at the revenue, the change in revenue. I should have typed this better. So here's the energy stocks that reported last week. You'll recognize some, you may not recognize others. This is the year over change in revenue on a percentage basis. So for example, Occidental Petroleum, 79.2% increase in revenue on a year over year basis, right? Look at everyone. There's only a couple people that haven't been able to play along. Marathon Petroleum, Pioneer, 87%, 81%. It's incredible. Devon Energy, where'd it go? Over here, 132%. So the profits are there to be had. It's very, very interesting. Watch this. So operating margins. This is the change in operating margins, right? 83%, 33, 35%, 29%, etc. You could see the change there. Williams Brands was one of the only ones that saw tighter margins. But check this out. So I share that with you because, sure, they're making more money. Do you invest in those stocks? Assuming you don't mind investing in the oil stocks, whatever. You invest in those? It's a decent idea, at least a look, right? Because what are these companies doing with the added money they're making from these higher sales and bigger profit margins? They're not expanding their business. That was a big debate between the oil industry and Biden a while ago, was we're making all this money. We don't know if we should put it back to work, right? So instead, we're going to buy back our shares and we're going to pay a higher dividend. Well, that causes prices of those stocks to move higher. Just look at Warren Buffett. He was one of the first, of course, to figure that out and want to participate in Occidental Petroleum because he saw that. Hey, they're not going to be expanding their business. They have no what they call capital expenditures. They just have a bunch of cash. When they got to do something with it. So if we buy back shares, stock price goes up, everybody's happy, CEOs make a lot of money, and investors make a lot of money. So really cool there. I rambled a little bit, so let's move on. You have 12 new highs, no new lows. Not really anything there. It's all extended stocks, so I skipped it for today. If we go to stocks in the news here, let's go on over. Let's go. Let me get just ready here for a second. Well, thank you for the compliments there. I hope the rain's not bothering you guys. I am impressed with how much it's raining here today. But I'm an old man now, so I'll take the water on the lawn. Let's start. All right. Dexcom. Well, look at Dexcom. So they're no dummies. What's in the Inflation Reduction Act? Well, there's a law in there that says we're going to put a 1% surcharge on companies, public companies, that want to buy back their shares. So look at all the names today that said, oh, we're going to buy back a bunch of our shares now. Dexcom said, we're going to just go ahead and spend all of our money on buying back shares. $700 million in an accelerated share buyback program. These people aren't stupid, right? Think of it as like your personal finances. If you find a reason to get a better bang for your buck, you're going to do it, right? All right, what do we got here? Tesla's in the news. Where'd it go? There we go. So Tesla's in the news. They're doing a 3-for-1 stock split. So that'll start in a week, 2 weeks actually, 8/25. And think about what they're doing. They're no dummies either. Would you rather buy back your shares, even though you're going to split them, at a lower price or a higher price? So I get the whole idea of how a split works. I know it's all notionally the same amount. They're going to do the same thing. So they're naturally, I believe they're splitting the price so they can start a share buyback program and get that price jacked up once again. That's what I would do. Tyson Foods down 8% on the day today, fell 9% in the first 20 minutes of the day. And this is not a stock that moves. This is normally a pretty slow poke type stock. Really, really crazy there. They said all the bad words. They said labor shortages, supply chain issues, and inflationary pressures. Ooh, all those three hot phrases that we've been saying there, or that other companies have been saying, that's the reason for the stock falling there. And you can't see it, I'm sorry. There you go. Let's bring it into the mix here. So that's the reason for your drop there. They said consumer demand is steady, but the consumer is impacted by higher costs and obviously inflation. No bueno. All right, moving on over to PayPal here for the day. You got PayPal in Barron's over the weekend. It wasn't a big mover here today, but Barron's said that as the company focuses on more of their core products and doesn't go crazy with crypto, they think the stock price is, what was their words? It should boost the stock price. They didn't give a target or anything. Sometimes they do, but they did not. Okay, let's do NVIDIA. NVIDIA, there you go. Beaten down today here. Says their second quarter revenue is going to be about $2 billion less than expected. So those are big numbers. That's what started everything off. Now here's the problem. They said we're expecting less gaming revenue, and so we've already reached out to our suppliers to adjust our inventory. What does that make you think? Well, who's their suppliers? Are their suppliers public companies? And if they're a public company, then they're going to take a hit because NVIDIA is ordering less. So you got big NVIDIA, big suppliers. One of those is AMAT. And that started a whole teardrop today in the stock market that basically went through all the stocks and brought your semiconductors lower. Yeah, there's not much more to say about that. I don't need to make it sound more interesting. Hey, lastly, what are you guys doing? You got your GameStop up 8%. I saw that one, and I saw Bed Bath & Beyond. Right? There's no reason for that. It's just up because people typed on the internet, hey, go buy that stock. It's not worth it. It's just up, right? What did AMC do? Yeah, same crap over here. There's nothing. I have no news for you. It's just a bunch of people said buy the stock. They convinced enough people to go buy today, and I feel bad for them. Yeah. You say some short covering in there as well, but how was that short covering started? People saying, yeah, buy the stock to the moon, whatever causes the shorts to cover. Come on. What are you doing? The amount of people that spend so much time focusing on is this milk or this pineapple perfect? Yeah. Feels good, smells good. What is it, like $3? You spend that much time looking at that. But when you read something online, you go, ooh, buy the stock. Look, it's going. With a whole lot more money. It's crazy. Anyways, that's all I have there for you for today. I'll take some questions if you have any. Otherwise, it is raining here. I mean, really, really raining. That is intense. You like Meta as a long-term? Well, you already have quite a bit of Meta, right? So you don't have much choice, I believe. You said you had a higher average cost. I wouldn't be in a hurry to add more to it myself. And really the main thing that sticks out is over the last couple weeks, like this. Okay, here's Meta. Over the last couple weeks, this is what Meta's done. And it's in the simplest way I can say it. All right, what's going on with this thing today? Like this? Okay. And now let's go look at the stock market. Over the last couple weeks, what has it done? Right? I'm not saying Meta can't go up, but what's it going to take to get it to go up? There's no earnings coming. There's no news that we know of that's coming. The stock market has been lifted. Amazon and Alphabet, Microsoft, they've all taken their shot higher, but Meta, nothing. So because of that, I'd say, really? You're buying a relatively weak stock for really no good reason. you know. Tyson sales up 8% because they did raise prices. Yeah. And I believe some of the, when you break it down, you go look through the chicken, meat, and beef category, their chicken is sort of their core business. They said that they only expect a 1% increase in sales. That's not going to offset that. That was actually pretty bad for them. That's not typical for what they do there. Use up your Bed Bath & Beyond gift cards before they go bankrupt. Yeah, go in there and buy those boxes of coffee, right? Those K-cups. You think of China and the U.S., I think China will do whatever they want because the U.S., we're not going to do anything, at least at the moment. There's no game plan. There's no focus. So as it pertains to the stock market, not much. There's not much there. It's never good when Congress passes a bill in the middle of the night over the weekend. Yeah, or like during the financial crisis, during the, what was it, the World Series, final game of the World Series. There was one time, I don't know if it was Fannie Mae, Freddie Mac, somebody that got bailed out, big one, during the Super Bowl, right? Or Countrywide, something, one of those, but I forget now. But it was like, they're doing this during a Super Bowl. You got 50 million people looking over there, and on C-SPAN, they're in the middle of voting. Yeah. Yep. Oh, Doc, you think that that's an indication of volatility returning to the market? So maybe those investors that got a little burned on the year-to-date pullback are saying, all right, let's get back in. What are we going to do? What do I know? Only thing I know is these meme stocks. Maybe people got some money to play the game again. Yeah. Why are the Chinese stocks not down as much? Well, the Chinese stocks just broke out of a downtrend fairly recently, but they have pulled back. I can use this. So we can use the FXI if you want. So you're looking at basically, think of this as large cap China. I don't know how else to say it. And then you got your A shares, which we still have A shares. So they have pulled back here in recent weeks after, you know, a pretty brutal beating like we've seen here in the U.S. So I don't know that I would say they haven't pulled back. Yeah. Oh, we got somebody going the other direction with Tesla. You definitely have to buy into the long-term story with Tesla. And so far, even though it's a really long-term investment, you know, they've kind of delivered on that. So that's a tough one to say that they wouldn't be able to deliver, but you're right. You're paying up today for tomorrow's prices. AMTD. I don't even know what we're looking at here. And I don't think I get the news data for this. I don't know. Couldn't tell you. Yeah. And never good when Congress says a bill's going to do something, but it does the opposite. Yeah, or doesn't do anything really that it's named to do. Call it something else, but what are we hiding there, you know? You don't support the EV bill, but it is inflationary. They can't produce enough already to meet the demand. And we can't all go driving electric vehicles. They're cool. I'll give you that. But we can't, today, as it stands, it doesn't work. You can't do it. Yeah. I've seen that a couple times, people saying essentially this is the Green Deal, the Green New Deal, just in a different term. So maybe that was part of the strategy. I don't know. Yeah. You bought Alibaba last week just to sell a $90 call. And oh, good for you. So I take it you didn't mean it to be a quick trade, but it's turned out that way. There you go. Yeah. I saw the thing about the IRS too. Not a fan of that. Could we just all agree not to go work for them? So it's 80 billion. They go want to try to hire a bunch of people, and we all just go, oh, thank you, because that one's a sad one there. Because you know what's happening there. It's going to be a guilty until proven innocent process. This happened back in the 80s with the same concept, and the average person is essentially audited and guilty until proven innocent, and that's not how it should go. And generally, the average person doesn't have their ducks in a row like most people, but you get treated as like a con artist or IRS scammer, cheater, whatever, and I don't like that. And I don't like that. Oh, you got called away. on your and now they're about to regret calling you away there, unless they exercised and moved on. But cool. Well, I'll wrap it up there, and coincidentally, right as the rain is dying down. But you guys enjoy the rest of your day. We will be here this week, and of course tomorrow as well. Thank you for watching, and be sure to hit the subscribe button, the thumbs up button, yeah, all that good stuff. Enjoy. See ya.
When you wish upon a star, makes no difference who you are.